And here we go. I'm going to wait a few more seconds before our room fills up a bit. I'm seeing the chat. Are you guys seeing the chat window? We got questions there. All right, let's get this started. Welcome everyone, live from New York. I'm in New York at the New York office of Uphold, as you can see. Talking to investors, talking to private trusts, talking to hedge funds. And what they're telling me, what they're asking me at every single meeting is, where's the real economy? Where is the real use case? And it is a perfect time to talk to Tradeteq, André Casterman, and Christoph Gugelmann. Welcome to Uphold.
Thank you.
Thank you, Martin.
I was asked, I think the question 100 times on Twitter, what do you think will happen to the price of XDC with this trader token? And I simply ignored all the questions because I need an explanation. Give us an update of what's going on. You've just minted, I think, the first block.
Yeah, that's right, Martin. So we minted, we deployed the contract yesterday. We minted the first tokens literally today. And we're super excited about this. So this is a token which is a fully regulated security token. It's based out of Liechtenstein. It complies with EEA regulation, and it's passported into European countries. At this point, it's 14 European countries that can purchase basically the token. If I mean kind of retail investors, and then of course institutional investors can access on a much broader basis, and then there's also a chance for others to purchase on a reverse inquiry basis. But the underlying pool is fully collateralized with trade finance. The pool will be insured, credit insured on top of that, and we are aiming to generate a mid-single-digit yield of 5% on this first token.
You will have your hands full convincing the American side of that, obviously. What do you think we are with this gap in understanding between Europe and the US? If you're talking about a security token, a securitized token, obviously Gary Gensler will have a field day with that. What has to happen in terms of regulation?
Yeah, I think it's all about creating clarity, and there are a few countries that have been front runners. We have gone to Liechtenstein. It's a small country, of course. I think there's about 40,000 people living there. But
I always miss it. Yeah, when I go to Zurich on the train, I always miss Liechtenstein. You go right through that. I was there. Oh God, it's gone.
almost there. Yeah, it's hard. You kind of like you have this 2-minute window if you drive through. No, but it's a country that has put this blockchain act in place. They were front runners, and they had created clarity. And they are by no means aggressive or anything. They just created a clarity of what it means, kind of like how to treat different tokens, how to classify these tokens, and that's all it takes. And after that, obviously, the European Union has followed or in parallel, but was a little bit slower. But now with the MiCA rules coming in place, etc., I think we have that clarity, and I hope, quite soon we will have and see the same thing also in the US.
Absolutely, I fully agree. Clarity is what's needed. Most of these funds don't know how to go about it because we have no clarity in regulation. And I think this is why this year, 2022, is an exciting year. What's happened in June in the UK and what happened in Europe on June the 30th is trend setting for the world. I mean, the entire world. Asia is basically dependent on UK law, and after all, the European Union is the largest trade body in the world, still, despite what my American friends tell me. So, I'm going to these investors, not banks, the private funds, the hedge funds here that I'm talking to. Why is trade finance an attractive proposition to them?
Yeah, so trade finance is an asset class that really kind of manifests everything people do commercially, right? So it's you can't artificially inflate it. The price of an apple will kind of like, kind of reflect what the aggregate purchasing power is, and it's not going to go up like Miami condos out of nothing. So it's a great asset class. It's also very much tied to commercial activities. It's short term usually. It's self-liquidating, and it's very little correlated to traditional financial products. And you are sharing in to a certain degree into the commercial benefits of a company. So if you move TVs, for example, and you need financing to do this, and you make 30% margin on doing that business, and you can't get enough financing, well, then you're not kind of like looking after the last basis points to get that extra financing in order to make a 30% more margin on the next batch. So it's hugely attractive to investors. And again, it reflects the real economy. It's relatable.
André, can you give us, and I think many people have a problem visualizing what exactly is involved in global trade. So in Singapore 2 weeks ago, the first bill of lading was put on a blockchain. We're talking to HSBC about the first letter of credit. What are the components in global trade that will move to the blockchain and then that will end up being a token or an asset or a digital asset class by itself?
Yeah, so we have to separate trade from trade finance. Trade is really what the corporations, buyers and sellers are exchanging, buying and selling to each other on a continuous basis. So these are usually goods, but could be services as well. And some of those goods and services are being funded. That means some of those transactions are being funded by banks via various instruments. And this is where we're getting into the trade finance space, where you have indeed letters of credit or receivables financing, payables financing. So there are a number of instruments that support the delivery of liquidity. And liquidity is as important as oxygen in your body. So you need it.
In everything. In
operation stops.
It's the magic word here on Wall Street.
Yeah. So we also call it working capital in the business. But where is the blockchain role is indeed in the ability. There are different levels of complexity where blockchain can help. But the basic level, I would say, is the tracking of something, an asset, a transaction, or a piece of goods that are being transported, the tracking of something across participants. If you want to know who owns now this particular asset, or then the blockchain is quite useful to track and to act as a technical notary, sometimes a digital notary with more trust depending on the governance around it. So tracking is basically a basic feature of blockchain. And that's what we're doing, for instance, through the ITFA initiative on the negotiable instruments, tracking documents to comply with some new regulation around the model law for electronic transferable records. But it's a kind of basic use case. Then the next use case could be, and I don't say I have the right order, but the next one could be to pay for asset on the blockchain, where the money transfer the money is paid on the blockchain at the same time as the transfer of the goods are being shifted from one party to the other. So you have kind of delivery versus payment on everything on the blockchain. And then as now we have done through TFD initiative, Tradeteq and XDC network with a Tradeteq token that Christoph can tell us more about, is really to bring new money into an asset class. So getting people, retail, institutional investors to buy those tokens in order through blockchain capabilities, in order to bring new liquidity into a piece of activity. And our focus through TFD initiative and Tradeteq is trade finance, but it could be other illiquid asset classes. But definitely we're using the blockchain to enhance the accessibility of this economic activity performed through trade finance to the retail investors that have traditionally no way to access this asset class. So we're giving them access, and the technology makes difference because the costs are so low. We offer, for instance, Christoph can confirm, but we can go as low as $100 for retail investors to start investing in trade finance through Trada. So I mean, here, back on your question on blockchain, tracking, payment against delivery, so DVP payment, and liquidity, new liquidity brought into a particular market are three use cases we are definitely working hard on, but there are additional ones for sure.
Taking this opportunity to remind people, I'm not watching the chat. I'm only looking at the Q&A. If you have a question, please post it in the Q&A. I think we have already answered two of them. Yes, it's open for retail customers. But Christoph, what is it good for, the trader token? What does it do?
Well, so what the vision here is that there is a huge trade finance gap out there, and it's not just a number which the Asian Development Bank reports. I think there is a huge opportunity to make kind of trade finance accessible to every small company out there, and there's like, I think 400 million small companies globally, which almost none of them, or very few of them, have really good access or any access at all to trade finance. So on the other hand side, we have retail investors or institutional investors that want to get access to that asset class. Now, if you go and buy just one single trade finance instrument, it's very difficult. You wouldn't be able to do the analysis. You wouldn't necessarily understand the specific risk involved. But if you're working with a large bank acting as an originator, or you work also with a non-bank originator that performs all the collection, the payment work, kind of knows that customer, then you can link the two sides together and you can open a market that very quickly actually changes dramatically access to liquidity for SMEs. At the same time, also provides a very fair and good and very accessible investment. And obviously, needless to say, with the token, we can allow retail investors now fractional ownership in such a pool. We can give them the same clearing without actually having to go through some clunky infrastructure, which only is available today for the largest asset managers. But everyone can now freely access and contribute towards closing the gap and also make some money out of it.
So just to make this clear and get rid of a few of the abbreviation that some of our junior listeners might not be familiar with, this is not trade financing for Apple shipping 3 million iPhones from Shenzhen to San Francisco. This is for your mom and pop shop, for your startup business. This is for people who go to the bank and are denied a loan or any access to liquidity to finance tools. Can you repeat how big that market is?
Yeah, no, absolutely. I mean, 80 to 90% of global trade needs financing. So that market is an 18 trillion plus market, and 7.6 trillion of that are getting financed by banks, but decreasingly so. Not just that, so multiple factors obviously involved. One is regulatory tightening on the bank side and continues to have a massive effect. The new Basel IV rules have been postponed so many times, but they will come. So that's not great news for the trade finance gap. And then, of course, also banks have starting to withdraw into their national territories. There's a very few truly global trade finance banks left. And all the cross-border trade between Africa and Southeast Asia, etc., is totally underserved and really has pretty much no liquidity. And that, I think, is something we can change, because ultimately, if you produce a widget as one of the largest corporates, or you produce the same widget as some of the smaller corporates, it shouldn't make a difference. You have produced it, you delivered it, it's of good quality, maybe someone has inspected it, and you should get access to, a similar comparable level of financing.
I've had quite a few talks which actually are exactly the same, but in a different industry. I've talked to people in the film industry here. For film finance, the biggest problem of getting an indie film made is liquidity, is getting access to capital. That's why one of the reasons why all of these indie films have one big megastar in them who is on screen for like 2 minutes and says one sentence is because then the studios are willing to put some money into that project. If you have financing tools with digital assets, then you can make any movie you want if you crowdsource it. And then I spoke to a startup platform here in New York that wants to be the crypto Indiegogo, right? So crowd financing. So my question here is, do you think that digital assets in general, however we will regulate and define them in the next 2 years, I think the next 2 years will be crucial for this movement. Do you think that the digital assets will make more, will help inclusion for smaller enterprises, for people across the board? Is it safe to say that we need these kind of digital assets to make the world fairer for the smaller players? André?
Yeah, that totally.
I'm sorry, I just need to give André some airtime.
Yeah, no, but
he's falling asleep.
we are definitely seeing a big need on the mid-cap and SME side. Sometimes an SME is related to a large corporate and they have a supply chain finance program where they can get early payments, assuming their large corporate buyer is making the effort to approve invoices, and then the risk of financing is lower, so financing the SME supplier. But in the mid-cap space, where you have no large corporate involved, this is where there is a big need. And this is where, with TFD Initiative and Tradeteq, we are working with supply chain finance platforms that are in that mid-cap space that is somehow underserved by the large banks, that have all the right capabilities in terms of supply chain finance programs, but that are focusing on the top-end corporate segment, not on the mid-cap segment. So we definitely are already impacting and extending liquidity through repackaging and now through the new Tradeteq through tokenization to this mid-cap space where the buyer is not a Fortune 1000 corporation.
So Christoph mentioned the TFD initiative, right? So how does that work? Who are the members? How does this initiative work? Can you give us an overview?
So that's the business community focused around indeed the distribution space, meaning there is a financial institution, could be a bank, a factoring company, or a supply chain finance originator, a supply chain finance platform, but a company that is really serving the corporates, usually large corporates for the large banks, but also mid-caps and SMEs for the other types of originators. And basically those originators, those financial institutions are in need of liquidity because they can't hold all the risks and they can't fund all the assets on their own balance sheet. They need partners in the background, and the background world is the distribution space where TFD Initiative is actually bringing to those originators a number of institutional investors, bringing liquidity to the trade space, a number of banks that want to fund more assets, but that they can't originate themselves, and a number of credit insurers that are there, of course, for the unfunded function. So we're definitely gathering all those players, and the way they do it, basically they join the initiative, and from there they discover the new market practices we have defined based on the Tradeteq hub, and sometimes, like in the case of the Trada token, we are combining the Tradeteq distribution hub with additional technologies such as the XDC network because you can't do everything with a single tech provider. You need to combine. And the Tradeteq is a good example of how we have combined successfully two tech providers in order to deliver a unique innovation, because Tradeteq is really unique in its field. So that's the TFD initiative.
Thank you. So what's the role of Tradeteq in this? You're the platform. Are you going to be the exchange, or will the Tradeteq be available on an exchange, Christoph?
No. So
do we need to list it on Uphold?
Well, that would be great as soon as regulation doesn't prevent it. But I mean,
obviously it does right now. We could only make it available in Europe at this point. Even there, it's going to be problematic. But regulators will catch up.
Yeah, and it's just now a matter of time. But what Tradeteq does is Tradeteq creates the asset, and obviously there is the process workflow automation which is required, and then the physical repackaging. And then, of course, also the operation of the token, the onboarding, KYC, and all of that stuff. So, why is the workflow processing so important? If you have tens of thousands, hundreds of thousands of instruments, which banks can deal on Excel spreadsheets and the likes, you cannot ship it to retail investors, and they only want to have a certain small portion of a large portfolio. So we need to extract these instruments from these originators, banks and non-banks, and need to kind of quantify them, reconcile them with the cash flows. We need to report on them, and then we repackage them into tokens, and from there we are selling them. The secondary market is not our. We don't offer a secondary business there. There's a business in itself, and I think with the clarity around the central security depositories on all these multilateral trading facilities, once that's out of the way, that you have to go through these Euroclears, etc. of the world, then at this point, everything will take off in an unprecedented way. Not just trade finance, but any security, basically.
I think we've covered everything that I have on my list now. Unless you have anything to add, I'm going to go to the 50 or more questions that have been put to us. Gentlemen, is it okay if we move to Q&A?
Yeah, there is a question on the Tradeteq availability in the US. That's the last one that was put in from Sierra Legacy. I think we can handle that.
Okay, let's start from the bottom. Why are we doing this on XDC? Why not on something else? What is the intrinsic advantage of XDC of doing this for trade finance?
Yeah, I think why have we chosen XDC? Because it's a network that is focusing on trade and trade finance. That's great. Very affordable in terms of transaction costs, and also has a dedicated ecosystem that is really interested to make a difference in the world of trade finance. So as such, it just felt as a natural fit.
I think we've covered the countries. The Tradeteq is available now where? If we can repeat that.
Yeah, so it's available in 14 European countries at this point. So that includes Germany, Belgium, Netherlands, France,
the usual
Italy,
suspects.
Poland, all the large jurisdictions, Portugal, etc. So as a professional investor, you can also purchase it if you come out of the UK, so we can be accepted. And then for other jurisdictions, it really depends on the respective law. The issuer, XDC-Tech, will do a screening, and then it will be on a case-by-case basis. It goes to a third-party external compliance office, which is based in Liechtenstein and is very close to the regulator. So this way, we are sure we kind of comply with everything. The US, unfortunately, is not possible at this point, but the US is the biggest market, and we have every endeavor, to.
I know. I need to go play some play some golf with Gary. I've got this.
Perfect.
We have this discussion like every single day. Why is the US so far behind in regulation? I think there will be a point when they will just jump ahead of the queue, right? They always take a bit longer, but when they get moving, they will try to define global standards. Are you aware of any competitor Tradeteq that is trying to do that in trade finance, or are you the only one?
No, I think we're really the only one in this space, because I would say there are a few purists out there. They are trying to create every single invoice between a buyer, a supplier, and the funder right from the start as a digital contract. Our view was always, before we have 400 million of SMEs and large corporates and funders on kind of like a blockchain infrastructure, let's just get going and take the off-chain assets, which are there in the millions, billions, whatever, in terms of numbers, and start to repackage them initially and turn them into an on-chain, diversified, accessible asset, reduce all the friction costs to the minimum, and create the real-time experience for investors. This is what we do, and then obviously over time we very much welcome, if everything becomes end-to-end integrated on the chain.
So is Trader going to be the only token, or are there more tokens coming from your side onto the XDC chain?
Yes, so we started, we slowly inched forward very carefully in this minefield of regulation. So we started with an NFT, where we first have taken a static pool of trade finance and sold it to an institutional investor out of Luxembourg. Then we have done the same thing with a revolving pool out of Luxembourg last year. And now we have done the first retail offering, which is broadly available. And from here now we want to morph this into a very broad, very large, accessible investment proposition that can also be a good alternative to a USDC or USDT, because you will get some yield on it, and you will have probably, a similar level of safety. With one big difference: you know precisely what's in this pool at all times.
And the assets are short-term assets, so the cash flows are short-term cash flows. Could be 6 weeks, 3 months, 4 months, but not 2 years necessary. It could be, but that would be the majority.
What is the connection to the XDC token? I mean, we have a huge Twitter community and fan base about XDC, and some form or another, they're all trying to profit from holding XDC. What is the connection between a trade and XDC in terms of price appreciation? Or we're not giving the financial advice here in any form or trying to predict any prices, but is there a defined relationship here, or is it just the amount of activity that's going on XDC that will define the popularity and therefore the rising prices? Or are there other mechanisms or algorithmic processes that affect the price of XDC?
No, look, I think it's the number of apps you have in the App Store, which will obviously drive the App Store up, and XDC is the native currency of the XDC network. Trada is one app in the App Store if you want.
Okay.
And it's a regulated token. The other one is a utility currency or commodity, however you call it. So yeah, I think it will be beneficial to the XDC a value in if Trada performs well. But there is no direct link. There is no,
Okay. Have you looked at the Actus standard? The Actus, Alan Mandelevich's baby, the algorithmic representation of cash flows in a token, because that's probably something that will be in focus with the micro regulation. That at this point we have basically dumb tokens, right? So you need an analyst, you need marketing, you need a community that drives the price. But if you have an algorithmic token that includes the cash flow predictions or the obligations, whatever you put into the algorithm, in the code, then we could do without the analysts, right? Are you aware of that at all? Are you working in that direction? I've had a lot of conversations about the actor standard here in New York.
We will go in a slightly different direction. So and that's a little bit kind of looking now into the crystal ball. But where we are going is using the trader token and successor tokens as the revenue generating power. So now the service is not that we provide obviously a network and infrastructure. This is what XDC does.
Network utility.
But we are providing that whole end-to-end workflow process from banks, non-banks originators, from their back office systems, all the way to have these revolving pools of revenue generating assets that can now feed essentially a token system. So that is where we are going, and I think that will be extremely exciting, and definitely hasn't been done with real economy, kind of like financial assets like trade finance.
That is the mot du jour also here in Manhattan. Every single conversation I've had is about the real economy. What does it do? Is it all just hot air? Is it going to be around in 5 to 10 years? Where's the real economic use case? And it's wonderful to talk to you at exactly this precise moment where I'm talking to all these funds and they're asking me, how does that fit into our asset allocation strategy for the future? I think the world is becoming aware that we're moving to a world with NFTs and digital assets in general will become the norm. And it's, as you said, it's only a matter of time before regulation catches up. Well, thank you very much, gentlemen. Is there anything else you want to mention? Any announcements you have to it? Next steps, next milestones we have to cover?
So I think Christoph already shared that the first tokens have been minted. That's how we say it now, minted. And indeed, the goal is really to focus on to bring to the market the initial originators, whether they are large banks, smaller banks, or supply chain finance platforms that will benefit from this new source of liquidity. That's really the focus now of the team. TFD initiative is this business community. There is a central technology stack by Tradeteq and XDC network in the middle. And basically, we want to highlight from this new product, Tradeteq token, this new product launch, which originators will benefit from the new liquidity. And of course, they will tell us which corporates are benefiting from this. But this is really the focus now, to bring this new liquidity to originators using the Tradeteq platform.
And maybe, if you're looking for further information, check out xdctech.io, and you will kind of find everything about the trader token. We're quite proud, that this is now finally live. It took a long time. It's difficult. Absolutely. In the US. It's also not easy in Europe to make this work.
Do you know what the best way is to promote this? That would be to come to my Ivrea event on September 12th. That's the perfect platform. That's the next step. Wink, wink, nudge, nudge. I sent the Learjet, okay? It's a short flight from Brussels now.
And the beauty, just one more thing. I was thinking that when talking to banks, the beauty of this model with Tradeteq and XDC network is that we are not selling any new technology to the banks. The banks have nothing to do in terms of XDC integration or network, new technologies, because there is the XDC tech that Christoph just mentioned in the middle, acting as a bridge between the existing world of originators, again, whichever type, and the new world of tokens, tokenization, digital assets, and retail investors. And XDC Tech in the middle is the legal entity, regulated, of course, that issues those tokens. So we are not asking the banks one by one to buy a new technology we're just telling them we have new liquidity. Are you interested? And here you go. That's how you can get it.
That's the key. That's the key. Everything evolves around liquidity. Well, exactly the same thing. Institutional investors are trying to get into the digital asset space, and for many of these tokens, there's just not enough of them. There's no liquidity. They're far too small. What these professional traders here need is much better access to token liquidity across the board. I'm just going to mention one commentary from Frederick here on the Q&A. This is not a question, just a compliment. Huge respect for the enormous amount of innovation that went into this. It's just incredible, and I cannot agree more. I'm so proud to be part of this. Thank you very much, Christophe. Thank you, André, encore une fois. And I'll see you in September in Ivrea.
Thank you, Martin.
Right. Thank you, Martin.
Bye-bye.
Bye-bye.
Take
Have
care.
a good flight. Bye-bye.